What up, what up, what up? Give everybody a couple of minutes. I can full screen this now. Let's do start and see if this is going to be a good example. Wait on one more person. Let's see, 3 people. Yo, how's it going? See, I was showing you today something pretty crazy from the daily time frame on the intraday perspective. Let's see if she's ready. Maybe she's just not seeing the message yet. Give her a few minutes. So from an intraday perspective, another basically daily time frame hack. This thing is another daily time frame hack that you can use to narrow down your zones when you are entering on the 15-minute or even the 5-minute. And I'll be showing you an indicator to use in Confluence with what I'm teaching you. It looks crazy on the 4 hour because it's meant to be an intraday time frame thing. This is time-based um, time-based time-based vertical lines basically, and each of these represents basically the sessions that happen. I encourage you to especially if you're intraday trading, to have some type of session indicator on your trading view. I would rather you have a session indicator and maybe the kill zone indicator at best. I really don't use these that much, but I really don't use these that much, but it's just one of those things that it's one of those things that it helps you know, for example, like I have mine set up. Here it goes. Like mine set up from 1 to 2:45. Because when I saved a template for, I guess I didn't. Normally mine's set up from 2 to 5 a.m. for a London session and 7 in the morning Eastern time to about 11 a.m. For New York session, and then I have one set up usually because I guess my template didn't save for a 1 p.m. 1:30 p.m. algo push again to catch a potential small move, but the setup has to be there. So it's not required. There are some that look a little cleaner than this, or a lot cleaner than this. Actually, this is what I prefer because it resonates best with me. But there are other session indicators that you can use in order to just go to your thing in and look up session, and there are plenty. It's like this one's got sessions Asia, New York, and London colored specifically, and this has got a lot of uses right here. So these are going to be the most popular ones up here, the top 4 or 5. Really, all of these are going to be likely very good, but I'd probably go for something simple like this. Absolutely. Let's see what it looks like real quick. I can get rid of this one for now. Let's see what that one looks like real quick. I'll turn this one off. So we'll get into the lesson in just a second, but it's very good to have, the actual, didn't do that. The actual sessions, kind of like structured for you. So, okay, this is New York open because it turned yellow. You know what I mean? The background turned yellow. Where it is, let's see what this one even looks like. So like this one's not, it's very similar. It's not set up, but it's the same thing. Asia, London, and New York. I actually might like this one better. But it doesn't, this one gives you less control because it doesn't let you change the times. It just goes by Asia and New York. You have to have these, you have to be a specific one. They have to be a specific time because time is this strategy is nothing without time. These moves happen at a certain time of day, and if you're not trading at that time that these moves are happening for the proper period, you're not going to be as accurate really at all as you could be, right? It's not simply just going in and trading. You're literally relying on the algorithm to deliver price the way I've taught you so far, and you look for those signatures in price once you during the time. So you will be learning, it's called time and price theory. And essentially it's everything that I've taught you only happens at particular times per pair. So anything like Great British Pound, Euro dominant, like Euro USD and things like that are going to happen overnight. Or you can take this and do New York session two potentially because it's a USD pair to pair, even though the USD pair is not the dominant one, the Euro is. So I would probably trade this overnight, but there may be opportunities in the morning as well. There's usually two moves, overall moves for per session. There's usually a move overnight in the overall direction, and it's usually a move in the morning for New York session in the overall direction, right? Some type of continuation, manipulation, and then another continuation. Drop one in the chat box if you get that. There's always a London session move, and there's typically a New York move as well. And there will be times where sometimes, actually, a lot of the times I've seen lately, there will be a New York setup, like the basically the manipulation portion of the move will happen during London session overnight for a New York continuation. So basically, if you wake up at like I don't know 6 a.m. Central Time, if that's what time are you on. If you're on Eastern Time, even better because it's like really 7 a.m. Eastern Time, so you'd have to account for an hour and get up at 6 to start trading or earlier. If you want to get a little bit more preparation time to catch any New York session pairs. So I would, if you're a USD, maybe I was trading overnight and I didn't see very much, but I saw it setting up. I could count on New York session being able to take that trade. So that's just something that's going to be taught to you. It's a pretty simple concept. Basically, Asian session pairs typically, move a little bit past 7 p.m. Eastern time. They start to kind of move a lot between 7 and 10. And if you're swing trade or anything like that, or even enter on the H1, you may be able to get into it an earlier entry pre London, and then kind of that London open and kind of push down or up, whichever way the direction was going for the continuation. Drop them in the chat box if you get that. So you trade UK and Euro based pairs between 2 and 5 a.m. right? And this is also lines up with the kill zones as well. Kill zones are basically they measure the high of the day and the low of the day, basically, or they basically measure the manipulation, right? They show you where the manipulation stop and start, as you can see here for this Euro USD short that could have happened. It wasn't enough volatility. Maybe tonight I'll probably just do an intraday trade for Euro USD short once we get back into premium territory up here. So as you know, this is in discount territory way down here. What will likely happen is price will come up, and there will be a kill zone somewhere right here or right here in this area for this fair value gap if you can see it. And your USD will come into premium territory in order to take the short, because what is our rule? We only take short trades. Let me change this template. We only take short trades in premium territory. It's the wrong one anyways. We only take short trades in premium territory. So if I turn this off real quick and draw wick to wick, premium territory is above the 50% level. That's any institutional footprint above the high, which I would say the high for that is right here. Above this lower high, right? He's definitely gonna take this one out and this one out. It's already been starting a bullish trend right here. My bad, guys. It's already starting a bullish trend. So as it come up into premium territory, that's gonna be either this fair value gap or right this fair value gap order block combo. It might come up and mitigate the order block, but if it does come up and take out this high, then for sure you have this. So what I would do is just consult your higher time frame and consult your higher time frame, 1 hour. Same thing, big fair value gap right here. It is technically in premium territory, the first half of it, but there's also an order block right here that was responsible for the push down that broke, that took that major sell side right here and right here. Jump on the chat box if you get that. That's significant, by the way. Whenever you have a order block, especially an order block for a value gap combo that was responsible for the push down that took the liquidity, those are going to be the ones that you're going to use for your point of interest, even on your higher time frame. Even if I'm using the 4 hour, right? Since there's no order block here, I would probably, in the 4 hours already going up, as you can see for the retracement, I would expect likely price to come up to either this fair value gap right here between these two candles on the 4 hour, or maybe even this one, but I don't see it really poking that high up into this one. Usually it doesn't go all the way deep into premium territory. Usually it'll stop somewhere close and then leave a little kind of buffer zone because this is also a strong high. Why? Because it took buy side right here, and you had a continuation down in order to take major sell side, right? Drop one in the chat box if you remember that lesson from a while back. The strong highs. And technically speaking, this is the power of three. You have one right here, two right here, and then this retracement up would be three. So this high shouldn't be violated. You have one, two, and then retracement up wherever it decides to have the continuation from is going to be three. So you know for a fact that it's going to be lower than this 4H lower high, right? You'll have boom, boom, boom. The power of three. You have a lower left shoulder right here. I don't mean to refer to it as a shoulder because that's a kind of a retail concept, but this is how it is. There's a lower left shoulder right here, and there's normally a lower right shoulder right here. So the right shoulder still has yet to be formed, and that kind of makes sense with the retracement. So this is the power of three. 1, 2, 3 pattern. On the third, you're going to have it drop down. So this would be an intermediate term high right here. One more time, drop one in the chat box if you remember the that pattern, the 1, 2, and 3 pattern, the power of three. Perfect. So that pattern is getting ready to form on the 4H and the 1H as well. So that's something you wait for. You wait for it to come back into premium territory, right? And you wait for your first point of interest that could be had to be respected or not, right? If price violates that and takes out that high, then the only literal choice, right? Because I like to watch for price action, right? I like to look at price action and see how it's reacting to the zones that I personally thought, based on my analysis and liquidity and things like that, that it is going to buy and sell from. And once I see obvious reactions going down to the 15-minute, the 5-minute, where it's like you're starting to break structure multiple times, on maybe like even the 1 minute, you have multiple sell side liquidity takes in this case, since Euro USD is short on the 5-minute, on the 1 minute, then you can be like, okay, bet that makes sense. If they're obviously coming for this, this is obviously the order block. I was obviously right. Plus, there's a fair value gap here, plus there's displacement, et cetera, right? So another thing you can do is use your optimal trade entry fib, right? This thing you want between the 79 and 62, right? You can change these to any color. What does this order block line up with? The 79%, which is the desired level, or the 62, one of these two levels. I like to turn mine red, kind of just pops out. You can turn yours green whenever you want to. It lines up with this order block right here. So that's what kind of makes me think that this order block is going to be used. So here comes for this for value gap all the way up to this order block, not take out this high, and then have a continuation from there. Drop one in the chat box if you can see that, and you get the kind of context and confluence you see there. You have to use all of the tools necessary in your disposal in order to build the most institutional confluence around your trade. If I have optimal trade entry plus displacement plus plus a liquidity shift to, you know what I mean, plus fair value gap, plus all of the confirmations that I've ever shown you that could be had, plus the previous daily highest taken and all of that, I'm going to execute the trade once I see price action is struggling to surpass my order block, just as I thought from that point, right? So these are my settings in case you did not get that. I did choose to extend mine to the right, but it's a pretty simple fib, 0, 1, and then on the right you have 062 and 079, and then prices, levels, percents, right, top. My font's 12, and fib is based on log scales, and you can save that as optimal trade entry fib. So just an example, I like to use a lot of common sense in my trading. If I thought an area was going to be bought or sold from, right, an order block or something like that, and it gets there and it's literally not passing it no matter how hard it tries, that's likely my area. Drop one in the chat box if you get that. Because a lot of people complicate trading. You can use common sense and logic in trading as well. And you can execute, you're supposed to execute your strategy like to the T, don't get me wrong, something systematic, but you're also supposed to use common sense and logic. If I thought that this was going to be the order block and I was wrong, it would be violated. And I would look, okay, well, that's not a valid order block. And I'm not going to buy and sell anything until I see extremely weak price action, rejections, struggling price action. And then you'll obviously see very soon after the reversal and a lot of momentum starting to go to your favor, right? After a few candle close. That's obvious price action, right? Execute on the momentum, execute on the fair value gap fill, whatever ends up happening. I teach you guys to go find fair value gaps and things like that after displacement, but because it's really easy to find that because it's like it's a set of rules, and they're easy to spot once you have an eye for it and you've been looking at it for a while. So that's just a kind of some insight on. I can't tell you how to think, but I can tell you a logical thought process and how you should a basic way to think when you are trading, so that you can develop your own personality around that. You know what I mean? So, um, take everything that I'm teaching you and develop your own personality around the things, and it'll show in your charts. So, on the daily time frame, from an intraday perspective, you have and this is where this indicator is going to come in right here. You have a few things that you're going to be looking for. I already talked to you about the high of the day and the low of the day and things like that. The previous day's high and the previous day's low on the daily time frame. Drop one in the chat box if you remember that. How the high of the previous day is always going to be buy side and vice versa. And if you're looking for a short, you're going to want to mark up the previous day's high. For example, you can see this big fair value gap on the daily time frame when your USD just got made. And what's happening? You had a bullish candle right here going up to do what? Drop one in the chat box if you know what this daily bullish candle is going to come do to this fair value gap right here. Or you can just drop the answer. What is it getting ready to do? Big fair value gap right here. Exactly. We're getting ready to fill that on a daily, right? Technically, the daily is down here. The daily is in a discount, which is not what you want for a short. So it has to trade back up into the fair value gap, probably likely into the order block as well, right here. It's just the order block right here as well, coupled with the fair value gap, which I taught you is like the optimal order block that you want. So you have that context right here on the daily time frame. And what happened here? The daily time frame traded above these 2 days highs and took buy side liquidity, right? We're gonna mark that up just real quick. Daily buy stops right here. Whoops, let me do that. Sorry, guys. Daily buy stops right here. So you get some daily buy stops. They were taken into this. It looks like a bearish breaker right here. You can see. Do you remember the bearish breaker lesson? What happened here? Price took buy side, and if this was bullish, which was this high, if this was bullish, price should have traded into this bullish order block and then a continuation, but instead it failed. This bullish order block that was responsible for the liquidity take here failed instead, and they broke structure to the downside, taking sell side instead. That would make this last bearish candle right here a breaker block, a bearish breaker block. Drop it in the chat box if you get that. It's not all about order blocks. Sometimes you have literal perfect breaker blocks. So the higher the time frame the breaker block, the better. That's more context and confluence for you. So that would be an example. That's how that looks on a daily. The higher of the candle would be the buy side liquidity, the structure breaks to the other side, and instead of respecting this down candle and it buying from there like it should have done like right here or something like that, or even right here, it failed it. So that would be a bearish breaker block because it took liquidity and what are the rules of a long price comes up, boom, breaks structure to the upside, and constantly creates those strong lows that don't end up being broken. So they only take short-term lows in between these really big moves. So this would be a short-term low, it would take it, but then there would be a continuation. Drop one in the chat box if you get that. This is with the low that would be taken, but then the actual strong low was never taken. Okay, perfect. So that's a bearish breaker right there, and you can see how well it was respected after that failed. I'm just gonna put daily breaker block right there in blue. Buy stops were taken right there, and price continued down, and then took major sell side right here. And we can just duplicate this real quick to make it a little bit quicker. You know, I'm always doing that. Let's just do this. Let's do this. Perfect. Oh my gosh, if that happens one more time. Okay. Slippy fingers. Okay, so that's gonna be daily sell side. So daily sell side was taken right here, and now price is coming back up into fillers for a value gap, likely into this order block as well, and then have continuation from there, right? So one thing you can do is you can mark up the previous day's high on the daily, or you can do it like this. This is a really good way to do it. I always mark it up on the daily here, and then I always mark it up on the daily here, and then I drop down to the 5 minute time frame to kind of fine tune it per session, right? So there's a couple of rules when it comes to what I'm getting ready to show you about the previous day's high and then the current day's high. I don't know what I'm doing wrong here. And then the current day's high. Oh my gosh. For um okay, done with that. The previous day's high and the current day's high for I don't know why my freaking shortcut to clone things is not working, but whatever. Um, there's something I have to show you about the previous day's high and the current day's high. Where is it? Actually, this is the wrong thing. This is the wrong annotation real quick. It is actually this one. So that is one previous high of day. That's what that stands for. If you wanted to make this template, it's pretty simple. Dotted dash line. I like mine's red personally, and then previous HOD, obviously on the middle right. Previous HOD stands for previous high of the day, and you can imagine LOD is going to stand for low of the day. So that's previous low of the day, and that's previous high of the day, previous low of the day, right? Drop one in the chat box if you get that. Okay, perfect. We'll cover that first. Let's go to the 15 minute. We're going to intraday time frame. Hit auto out. So actually, no, I'll do this in even easier way because I want to be able to explain this to you in a way that you will it'll resonate with you really well. Also mark up. This is a good intraday example, actually. You go previous high of the day, and then also previous low of the day right here as well. And then we had, I could delete these two right here for now. We'll even use that as an example. This is actually a way better one. So I marked up on this day here, on these 2 days is what I'm counting. So just kind of pay attention to these two candles right here. So that on this day, which was March 6th, 2023, the it did trade above the previous day's high. Drop one in the chat box if you see that. It traded above the previous day high, basically right into the breaker block. Let me change that template to high of the day. At the time, that was the high of the day as well. And we're going to focus on just this day right here that's inside of this breaker block. Perfect. And then that's the low of the day. So I like to mark mine up on the day starting out. You're gonna do this every day. After you learn this, you're gonna add this to your arsenal. So the rule is that in between the high of the day and the previous high of the day, there's always a valid intraday time frame zone. And I'm going to show you how. You see I've marked up on this candle, right? Previous high of the day, which is this one right here. Previous low of the day, which is this one down here. And then on this candle, which would be the next day after that, that day's high of the day is right here, and that day's low of the day of that candle is right here. Drop one in the chat box if you get that, and you can see that. Perfect. So I'm going to drop down to the 15 minute, and we're going to get into this indicator and how it correlates. And I'm going to scoot over to that portion where it was where it I can't think right now where the markups were. So the rule is per this indicator that I'm showing you, and you can do this. It doesn't have to be this one exactly. It can be one that's cleaner. I'll show you a few. But basically, you want to do New York session. When you do just do a look up a sessions indicator, find one that you like, and put the times for the zones. One session 2 to 5 a.m. and that's Eastern time. And you also want to make sure that you have your clocks for your trading view in New York time, Eastern time. If you do, even if you don't live in that time zone, you have to have it in New York time for the purpose of the algo running on Eastern time. So if you do live in a different time zone, you will have to account for that when you trade that time zone difference. Just to let you know. So that's something that you should do today, pretty much immediately. So the rule is that the yellow or whatever color you coordinate this as represents London session, right? And this is the start of New York right here. My bad. This is all London session until 7 a.m. Eastern time until the blue. Once the blue starts, then that's all London session. And then the end of the brown is the end of the session. Drop one in the chat box if you heard me and you get that. The yellow starts London. As you can see, the time's on the bottom here. It's about midnight. That's London open aroundabouts at about 12:45, 1 o'clock in the morning. And then London session continues. New York session starts. That's about 6 a.m. So New York opens at 7 a.m. right about there. But the actual indicator here will start at 6. And then that's New York. And New York continues all the way into the end of the session, right? This is 1:15, so obviously that's the 1 p.m. algo push time that I'll teach you about. The green here is going to be Asian session. Do not pay attention to the session. You should have it on there, but make sure you have Asian, New York, and London. London 2 to 5 a.m. Eastern time. New York 7 to I would say about 11 Eastern time, and then Asia is going to be like I don't know, let's just say 6 p.m., 7 p.m. to about 11, yeah, 7 p.m. to about 11 p.m. Is the Asian session, right? So the rule is that the high of the day only occurs there. The high of the day only a high of the day and the low of the day occur between London and New York. They form in between, specifically in between London and New York, right? So the purpose of this indicator, right, or any session indicator, it doesn't necessarily have to be this one. This is the one that it just resonates with me. Normally there's like less markups on my charts, but I want to do this as an example. You're going to mark up the high of the day, the low of the day, and on the daily, and you can, like I said, fine tune this, right? So as you can see here, the low of the day here formed right here. So I'm gonna scoot this over and fine tune that. And that did qualify because it happened in between New York, my bad, London and New York. Drop one in the chat box if you get that. That technically was the low of the day because the session ended right here. So that's technically the low of the day. It was the low of the day right there. And I'll get rid of the indicator in a second. I know it's kind of hard to see. I typically don't put indicators on my chart like this, but so obviously during that same session, right, where this low of the day formed, this was obviously the high of the day up here. Drop one in the chat box if you get that. And you can see it does line up with the times that I just stated. Perfect. So that's that same daily low of the day. I just fine tuned it down to the 15-minute. Obviously, the candles break down, and this is going to be the high of the day for that day. What happened, right? What happened? Price came up. There's also the previous high of the day as well. Let me zoom this over. I forgot. So a new yellow started. Not bad. It was way back here. At the time, a new session started right here. If you can see that. At the time, this is going to be the high of the day there on that day. This is the London session. It's the high of the day for that day because the session continued and just continued bearish that entire day. And then this is the previous low of the day. As you can see, it barely made it, but the low of the day formed at pretty much the end of the session there that day. Drop one in the chat box if you get that. So every yellow starts a new London session for the week. Every yellow, and it just continues to the end of the session, and then it goes into the Asian session right here. So like I said, there are other ones that are cleaner, but I personally just like this one. There are ones that are cleaner that kind of just have like it's different. It's nice and clean. I'll show you a few, like I said. So that's previous day's low of the day, and previous day's high of the day right here. And then this is going to be that day that we refer to in the dailies, low of the day right here, screw it up, and then you have the high of the day right here. So in between, right, the previous high of the day, if you're short, and the previous and the actual high of the day, right, it's going to be a valid zone. What happened here on the 15-minute in between those things that I just stated? Price came up, price came up, created took buy side liquidity here on your left. Actually, let me zoom out a little bit so I can just show you that. Took a ton of buy side, actually major buy side right here. Took some major buy side right here. Drop on the chat box if you see that. They did trade above that. I'm zoom into where they traded above. It was right here. They traded above that. Took major buy side. What do they have to do next? They have to sell off. You're already looking for a short on your USD. You marked up the high of the day at the time. You marked up the previous high of the day, right? And what you're gonna do is, if you're currently in a session, you're gonna go back 2 sessions, right? And they're gonna mark up the high of the day there. High of the day happened, previous high of the day, valid zone in between. Price does come up, or it broke down. Fair value gap was formed. You could have had an entry right here on the fair value gap fill. You can see it right here. So after price continue bullish. There's still no signs. There's still no signs of any bearishness, right? Price broke structure again right here, actually, and created relative equal highs. There's absolutely nothing stopping price from taking out those relative equal highs, aside from the context that you have that it's actually going short. Price then showed you that they were bearish and broke sell side right here in this area, right? They just proved to you that they were bearish because we had liquidity shifts all over again. You also had, technically speaking, the power of 3. 1, 2, 3. Could have sold right there really easily. Plus a fair value gap. Plus price broke structure right here. Should have came down and actually bought from there if it was bullish. Instead, it failed. There's a 15-minute breaker block inside of your daily breaker block. Drop it in the chat box if you can see that. Sure. So you have to study what price is doing. You know what I mean? Like what's it doing? What's failing? What's supposed to have happened versus what you think is going to happen. That's a really terrible color. I'm not even gonna lie to you. Okay. So you had a bearish breaker right there. So you had context with that fair value gap. Price broke down again. If you didn't get an opportunity to get in there on this fair value gap, you had a perfect short-term low being taken out. What needs to happen next? Short-term high. That was this guy right here into that fair value gap. So you had a recent buy side context again. You had 2 actual entry opportunities right there into this order block, actually, which was responsible, technically speaking, right? For doing what? Taking that. What did I just tell you about order blocks? You're gonna focus on the one that's responsible for the sell side take. This is the major sell side take right here. Drop it in the chat box if you get that. The biggest advice I have to you is, if you're ever confused about what price is doing, zoom out and look left. The biggest amount of money is lost by not looking left. You're too focused on current price leg. What is that current price leg taking, which will be on your left? You have to be able to trade on your left side of the chart and your right side of the chart, right? What you're doing is you're analyzing what current price is doing to take liquidity on the left side of the chart, and then comparing that to current price action and things that are forming, right? If you can keep taking the sell side, taking out short-term lows and then short-term highs over and over again, showing me bearish, eventually you have to pick a time to just execute on the things that you see. So you had some sell side here, price took that, came up, took out a short-term high right here into the order block / fair value gap combo, which was responsible for the major sell side take right here. Price pummeled and tanked, and you had an insane entry opportunity several times. I was just taking this all the way down personally to the at least this low right here, because there was a much momentum, because they're going to come very aggressively for that major sell side since they're bearish, and that can be an actual target for you, a realistic target, because look at all the momentum behind that. Look how rapidly they came for that sell side. Drop one in the chat box if you do get previous day's highs, previous day's lows. And you can also do this without the indicator just by marking up the previous day's daily high. But in order to kind of fine tune it, I did use the sessions because this does happen in between certain times. So I basically reflected that here per session and called it a day. Perfect. So that's another hack you can use. You don't have to necessarily use that, but it helps fine tune it when you're down on your actual intraday time frame. You can just go to the daily time frame and mark up previous days high, previous days low, and then you can wait for the daily candle to form its high and its low. Sometimes it's very obvious, which have already been established. For example, this high would have been very obvious. It was on its way down. You see on momentum, it'd have been very obvious that it was coming for this day's low, and that given the recent buy side liquidity you take right here on the actual daily time frame into the institutional footprint, the next candle is going to be bearish. Also, this is that pattern I told you about when actual when price comes in and then takes liquidity and digs into an institutional footprint like an order block or fair value gap or a breaker block. You're gonna have that 1, 2, 3 combo I showed you too. 1, 2, third candle is gonna be bearish. Drop one in the chat box if you remember that. You have the 1, 2, and then the third candle is going to go in your direction, right? So you have to use everything you know in order to get the best possible trades, right? I just wanted to show you that previous high of the day, previous low of the day. Price came up, Violet took that buy side that was right here and basically shot price down. So you can expect either this current candle, and if this candle closes bullish, I would personally wait for the next day to actually trade the trade. So this candle did close bullish. I would have traded this. I would have traded this yesterday for a short. So that's what caused all that momentum was actually this just one candle right here on the daily time frame. And you could have used the 1, 2, 3 daily time frame, kind of like a pattern I showed you. This specific to when price something's being mitigated, right? Something's being drove up to, they're coming up to take some liquidity in order to have continuation. That's on the daily time frame. Grab one in the chat box if you get that. And do you guys have any questions so far about previous high of the day, previous low of the day? It's pretty much what I showed you, but just a little bit more advanced. You can take this down to an intraday time frame and use the fact that it did violate that previous day and wait for an actual valid footprint in between that previous high of the day and the high of the day, or the previous low of the day and the low of the day if you're bullish. Anybody have any questions? Yeah, it's really good for intraday. It's just a way to basically narrow down, the your zones. It's going to perform in between the previous high of the day if you are bearish, and previous low of the day and the low of the day if you are bullish. So let me know how that goes. Let me know if you guys have any questions about that. If you guys run into any trouble in your analysis and trading, that's just kind of like another bag to have in your tricks. You know what I mean? It's something that you can use to create more context because this is algorithmic. Basically, the algorithm forms this valid order blocks in between those things that I just discussed. It really does. It filters each day's movement very nicely, and it zones down your zones into just places that either it can or cannot be. There's no yes or no about it. And most of the time you see it appear, and when people do lose, it's usually human error, right? Even me, when I lose, it's not the algorithm delivering price wrong. It's literally my own human error when I lose. I miss something, I miss some liquidity, I miss one level of liquidity, I set my limit order, didn't see something, didn't look to the left enough, you know what I mean? Things like that happen all the time. You just have to constantly adapt and improve. So if y'all don't have any questions, that's pretty much it for this live. Same time tomorrow works for you guys. It works for me. We're gonna be covering some more stuff that's a little less technical and kind of starting to get into the fundamentals as well. Resources you guys can use in order to get your fundamentals down and basically how to use them to strengthen your trades. All right, guys. I'll see you guys tomorrow. I'll see you guys tomorrow. No problem.